Good afternoon, friends. Today we are on the 11th study circle meeting and I welcome all of you on this rainy day. Though there is a heavy rain, but I can see the presence over here because the topic itself is such that it requires tremendous today's topic, as far as today's topic is concerned, amendment in the latest law because of the introduction of the budget by the finance minister, and which has get the assent on 26th of this June 2014, and so it becomes very much important to analyze what are the changes which are there, especially the VAT audit wherein the limit has been extended from 60 lakhs to 1 crore in line with the income tax. So to analyze the in-depth analysis, we have invited a very learned faculty which is very known to among us, none other than Mr. C.A. Kiran Garkar. We welcome you, sir, on this aspect, and I briefly introduce you the Mr. Kiran Garkar. He is a practicing chartered accountant, and specialization in the sales tax area. He was the member of the Managing Committee of Sales Tax Practitioner Association of Maharashtra from 1996 to 2001, 2002 and 2003-04. He was the Associated Editor of the Sales Tax Review, mouthpiece of the Journal of STPM. He has been appointed as a Secretary of the VAT Core Committee, revived by our association during the period 2004-05 and 2005-06. He had a short stint with teaching of profession as a lecturer of accountancy. He has presented papers at the seminars held by STPM and contributes regularly to our monthly mouthpiece Sales Tax Review. With brief introduction, I welcome Mr. Kiran Garkar and request all the members to invite him with large applause. As a mark of our love and affection, I request the incoming President, Mr. Sachin Gandhi, to offer him a memento and a flower of bouquet. Now I request Kiran Garkar to have the...
Aware that this year the rains made us wait. Pray for the rains so that our life should be very easy. Somewhat similar situation we were put in because on 9th of June bill was presented. We heard that assembly session is over and bill is passed, but then as certain political dramas was unfolding and everybody was around the chair, we were in a very difficult situation as to how to guide our clients, whether the act is actually, whether the amendments are actually or not. And it was very kind of Sales Tax Department that on 7th of July 2014, for the first time, we could see on the website the act which is gazetted on 26th of June 2014. So officially we can say that it has been gazetted on 26th of June and made applicable from 1st of July 2014 as and when stated under the Act. And rest of the provisions are applicable from 26th of June 2014. Actually, I am supposed to speak upon recent amendments under MVT Act. I will touch upon the Act as such, and thereafter, if time permits, I will take you on a tour rather of border checkposts and what is there now in store for the dealers to come, and which in turn is to make our life also as busy and engaged. Friends, as I told you that this particular Act number 27 has been gazetted on 26th of June 2014. Of that, 4 provisions have been made with effect from 1st of July 2014, and out of these 4 provisions, first provision is under Maharashtra Stamp Act, so we need not worry about it. So there are 3 provisions. First provision under PT Act, second provision under Luxury Tax Act, and third provision under MVT Act, which are effective from 1st of July 2014. Rest of the provisions have been made applicable from 26th of June 2014. First, I will touch upon a very lighter amendment which has been done to Profession Tax Act. In Profession Tax Act, we are aware that there are certain exemptions given, and one of the exemption was given to the parents of mentally retarded children. Now, the government is kind enough to extend that particular exemption, and even that particular person who is mentally retarded is also eligible to claim exemption along with his parents, etc. Of course, it is a conditional exemption wherein such person with intellectual and development disabilities, that is mental retardation which we call, has to bring on record his mental retardation from a psychiatrist working in a government hospital. And for that, government hospital has also been defined, explained in the provision itself. And in the first year, when that particular exemption is claimed, that particular certificate is to be kept on record with PTO and the exemption will be eligible. The second amendment to PT Act is, we are aware that 2,500 slab was increased to 5,000 in the year 2009. Now that slab stands increased to 7,500. So basic exemption limit for the purpose of profession tax now is 7,500. The slabs under which tax is there will be only two, 7,500 to 10,000 and 10,000 above. So only two slabs will be there, and this particular amendment is effective from 1st of July 2009. Now the mute question which comes to our mind is that the amendment is effective from 1st of July 2009. As the theory goes and the principle which the profession tax department follows, your June salary is supposed to be paid in July, and then the profession tax is to be deducted and to be paid on or before 31st of July 2009. Then whether the 7,500 increase limit will be applicable to June salary or whether it will be applicable for salary paid for July 2014 onwards. As I said, the government took its own time, and only on 7th of July this particular act was kept on website. I think it will take another few days for some circular guidance etc. to come. But then I thought it fit to refer to history, and what I found out that earlier when this particular slab of 2,500 was made to 5,000, it was in the year 2009. Commissioner had issued one circular, that is 32T of 2009, dated 24th of November 2009. And in this particular circular, it was stated that revised deduction shall be applicable for salary or wages for the month starting on or after 1st of July 2009. Now, if the same principle is to be followed, here also, we need not worry about what salary is paid for June. If in June, for June the salary is say 6,000, even the PT will be applicable over there. But from July onwards, one will have to check. If it is less than 7,500, it will stand exempted. 7,500 onwards, that profession tax payment will start. Then friends, we move to amendments which have been made under Luxuries Act. Certain amendments are of very technical nature because of the changing scheme of the government, that is inclusion of tourism projects 2006 etc. Certain amendments have been made. The major change which they have made is once again in the slabs for payment of taxes. This amendment is also effective from 1st of July 2014. Earlier, this particular slab exempted receipts of 750 per residential accommodation per person from the payment of luxury tax. Now that particular basic limit stands to increase to 1,000. So up to 1,000, whenever you are in receipts of on account of luxury provided, there will not be any taxes. Next slab will be 1,000 to 1,500, wherein 4% tax is to be paid, and 1,500 onwards you will have to pay 10% luxury tax. So that synchronization has been done with effect from 1st of July 2014. Then friends, you will find under Luxury Act, they have introduced section 22B, and it gives a formula for calculation of incentives to eligible unit in certain contingencies under the Tourism Project 2006. Now once again, as I said, certain technical amendments which were made to definition clause, etc. Here also that amendment has been made, and now they have provided the formula that in case if there is some increase in capacity of that particular project which has been certified under tourism project, then how that particular benefit of luxury tax will be available to him, and how the calculation of eligible turnover of receipts will be made for the purpose of such eligible unit. In fact, what I feel that Rule 93(1) of MVAT Act, that was challenged in writ petition before Bombay High Court. It was about the retrospective operation taking place of that particular provision for the reduction of benefit, etc. It was in the case of Jindal Polyfilms Limited, and Bombay High Court had turned down that particular writ petition, saying that such type of retrospective amendment can be made looking into the spirit of that particular judgment. Now here they have tried to introduce section itself wherein such eligible unit, if it is enjoying increased capacity, that proportionate calculation will have to be made. With these friends, we move to MVAT Act. First and foremost, section 3, which provides for the slabs or limits of obtaining registration under the MVAT Act, stands now increased. Earlier, this particular slab provided that if a dealer has a turnover, sales turnover of more than 5 lakhs of rupees, then he has to get registered under the MVAT Act. Now this particular slab of 5 lakhs of rupees has been increased to 10 lakhs of rupees, and this particular amendment to the Act will take place from 26th of June 2014. That is first thing. And with this particular policy in their mind that they want to increase the turnover limit, they have provided for a very specific section. In section 16, clause C has been added. Section 16 talks about cancellation of registration, etc. Therein clause C has been added along with earlier two provisos, wherein dealer himself approaches to the commissioner that he has discontinued his business, or commissioner sends out the notice to the dealer that you are not doing any business, I want to cancel your registration certificate, etc. Now clause C has been added, and this clause C reads, the turnover of sales of registered dealer other than an importer has during the year 2013-14 not exceeded the limit specified in subsection 4 of section 3. If you refer to budget speech, what FM had referred that because of this particular provision which they are making, about 60,000 small dealers are to get benefited. That means 60,000 dealers can go out of VAT framework, they can get their RC cancelled. That is what the statistical data says. The most important thing which we have to keep in mind is that first check up whether dealer is an importer. If dealer is an importer, even if turnover is less than 10 lakhs of rupees, the number will continue. If he is not importer but he is otherwise, he may be a manufacturer, retailer, etc., and his turnover is less than 10 lakhs of rupees, then option is given to such dealer to continue in the VAT network or to go out of it. So such dealer will have to apply to Commissioner of Sales Tax in prescribed form, that is 103, we are all aware, on or before 13th September 2014, and thereupon the Commissioner may, after such inquiry as he deems fit, cancel the registration with effect from 1st of October 2014. So the dealer will be liable to pay VAT up to 13th of September 2014. He will have to upload his last return along with J1, J2 up to 30th September 2014, and from 1st of October that number will stand cancelled. That is what the scheme now provides for. Then we move forward. In section 10, there was a reference of the post of Senior Deputy Commissioner that has been done away with because there is no such post in the department. We straight away go to another important amendment which they have made to section 20, which deals with returns and self-assessment. Here in subsection 6, we all are aware that the concept of late fee was introduced. This particular amendment has taken place from 1st of July 2014. I will just read what they have drafted in that particular 26. Where a person or a dealer fails to file a return within the prescribed time as provided under this section, then the said person or dealer shall, before filing of the said return, pay by way of late fee an amount of rupees 2000 if the return is filed within the period of 30 days from the expiry of the due date prescribed for filing of such return, and an amount of rupees 5000 in any other case. The amount shall be in addition to any other amount payable, if any, as per return. Now here 2 slabs have been made. The late fee has been scaled down. Last year we are aware that they had provided proviso that on certain circumstances Commissioner will come out with a notification to exempt this particular payment of late fee, etc. Now they have gone one step further. Now they are trying to say that okay, if your delay is up to the period of 1 month, you pay late fee of 2000 rupees, and if delay is beyond 1 month, then you will have to pay late fee of 5000 rupees. That is first thing. There are 2-3 questions which remain unanswered as on today. First thing is, when we are talking about within a period of 30 days, what a dealer should consider. To make myself more clear, I will give you an example that we are now uploading quarter ending June 14 return. Due date of this return is 21st of July 2014. Commissioner by way of trade circular has intimated that if tax is paid on time, that is 21st of July 2014, then dealer gets extended period of 10 days for uploading of the return. I think Commissioner should clarify in his circular which date he is looking at for calculation of that 30 days period, whether it is 21st of July or whether it is going to be 31st of July. Because that can be a case the dealer has paid tax in time, only thing the return has not been uploaded. In that scenario, whether you should look to 21st July or 31st of July, that will be a mid question. Second thing, if you have referred to budget speech, therein there was a reference that for earlier pending returns up to 31st of March 2014, the department wishes to bring in a scheme wherein you can pay late fee of 1000 and upload your returns. But no amendment to that effect has been made to the act. Maybe they are coming out with a separate notification, etc., and it may be in the pipeline. But as on today, I cannot opine anything about that particular scheme which we read in budget. Only thing which is available in your hand is a late fee scaled down 2000 up to first month and 5000 thereafter. Then we go further. Now I will deal with certain amendments which they have made to assessment section, that is section 23. Herein there was one very beneficial provision from the viewpoint of the dealer, and that is the reason why it has been now taken off the records. And in very lighter spirit, I told to one of my seniors that, sir, it is because of you this particular withdrawal has happened. The thing was that there was a decision coming from Mumbai High Court that okay, for that particular year 8-9, if refund application is not filed within the period of 18 months, then the department has to entertain that refund application and grant the refund. That was the decision. And with that decision in our hand, everybody who had missed out that particular refund train started applying to Commissioner, saying that this particular 501 was not uploaded and therefore he should be allowed to upload that 501, or that physical form of 501 should be considered for the purpose of granting refund. And secondly, side by side, form 305 was also given that you kindly instruct that assessing authority to undertake my assessment. So that particular scenario was there. This particular subsection, it talked about filing of Form 305 by a dealer, and thereafter commissioner had to direct that assessing authority as to how to conduct that particular assessment and how to look at that particular issue, etc. So in a sense it was beneficial provision. But that now stands deleted. Now nobody can go to the commissioner knocking on his door and asking for the directions for assessments to take place. Then we go further. There is an amendment to subsection 10 also. Subsection 10, as it existed earlier, I will read out that particular section along with the amendment. A dealer or a person may be assessed under a single notice and by a single order of assessment in respect of more than one period covered by a return, so long as all such periods are comprised in 1 year. So this was especially in the light of that entire mess which they have done with the assessment section. Earlier they provided that okay, we can pick up one particular period and we can conduct business audit. Once business audit is conducted, commissioner said that if he is not satisfied with the results of business audit, he can undertake assessment of that particular period. So the basic idea in their mind was return wise assessment. Thereafter they realized that we are going to miss, if we are going to make period wise assessment, year wise call we may not be in a position to take. So they amended this particular section to say that he can be assessed with single notice under a single order for all the 12 months of that particular year. Now they have added a proviso. That proviso says, provided that in respect of the period commencing on or after 1st of April 2011, in case of a dealer is required under the rules to file more than one return in different forms prescribed, then such dealer may be assessed separately for each form of return for the said period. Now the question is, who are such dealers, especially to look into, and mainly you will find the answer to it that all these package scheme of incentive units who are also required to file 234 along with other units, those are the categories who have been filing two different types of the returns. And now there once again they want to make pick and choose. Now that amendment says that a dealer when he is required under the rules to file more than one return in different forms. When they are talking about different forms, it implies 231 coupled with 234. Then such dealer may be assessed separately for each form of the return for the said period. So 231 may be left out, only 234 call may be taken for the assessment by the officer. That is what this particular amendment keeps. After amendment to subsection 10, you will find amendment has been made to subsection 11. Now what is it subsection 11? This has been a great issue of debate last year when especially those issue-based assessments etc. were passed under section 23.5. Because those 23.5 assessments, whether that cancellation of order can take place or not, or whether the cancellation of order will take place only and only if assessment orders are passed under section 2, 3 or 4 was a big issue. Now, having found out maybe the lethargy of officers that ex parte orders are passed, dealer approaches for the cancellation of that particular order and no cancellation orders are passed. What is usually the approach of the officer? That if I cancel that order, that countdown of 18 months starts immediately, because section says that once that cancellation order is passed and served on the dealer, within 18 months fresh assessment has to be done. Now to prolong that 18 months period, usually the forms were kept on record without actually passing the cancellation order. Now having realized this particular issue taking place, they have revamped this particular section in entirety, and I will just read how the amendment is now having its own effect. Where a dealer has been assessed under subsection 2, 3 or 4 and he makes an application in the prescribed form to the commissioner within 30 days of the date of service of assessment order for cancellation of the assessment on the ground that he had not been able to attend or remain present before the commissioner at the time of hearing when the assessment order had been passed, the commissioner shall, after verifying that the contention of the applicant is correct and that the prescribed conditions have been fulfilled, cancel by order in writing within 3 months from the end of the month in which such application is made. So now this particular time limit has been introduced, that once I apply, suppose I apply in the month of July, say as on today, after finishing this meeting, I go with officer and I file my 316 for cancellation of order. Then from the end of this month, that is July onwards, I have to count 3 months, August, September and October. So by 31st of October, if that cancellation is not passed, then the said assessment including any penalty levied etc. and shall make a fresh assessment that implies that the officer has to pass order once I have given my application. He can pass very well that order immediately or maybe by tomorrow. But suppose if that cancellation order is not passed before 31st of October, then anyhow it will be presumed that the cancellation order has been passed on 31st of October. Once it is presumed that my cancellation order is passed on 31st of October, my period of 18 months for passing fresh assessment will start from that particular day. That is how that particular amendment is going to affect. Then friends, I move to amendment which they have made to appeal section, that is section 26. Very hard-hitting amendment has been made, especially we being the link between that assessment proceedings and between the dealers. We find that every now and then we are saying that for no fault of dealers, dealers are not in a position to receive declarations from outside the state. There is a lot of correspondence, they are following up those C-forms, but C-forms are not coming up. And now to add cream to that particular situation, here the stay provisions has gone drastically under the change. In section 26, what they have done, that where that particular section talked about granting stay etc., they have inserted a proviso, and proviso reads in very peculiar terms, provided that in case of an appeal filed on or after 1st of July 2014. So this particular amendment they are not trying to say is effective from 1st of July 2014, but it is having effect from 1st of July 2014 for the appeals which are filed on or after 1st of July 2014. It says against any order in which claim against declaration or certificate has been disallowed on the grounds of non-production of such declarations or as the case may be certificates, then clause A, where such appeal is filed after 2 years from the end of the year to which such claim relates, then the stay shall not be granted unless the appellant makes 100% payment of tax in respect of such claim. I stop over here. What they are trying to say? Look to the date 1st of July 2014 and they are trying to say that your assessment is passed and period of 2 years is not over. So which will be that year? 12-13. If you are filing appeal against your CST order pertaining to year 12-13, then only you will not get hit by this particular clause. Otherwise, virtually, the appeals what we have been filing are 6